Good morning and welcome to T-Hub Capital, the Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Welcome to T-Hub Capital's The Investors Lounge weekly newsletter. Today's date is the 3rd of June. Let's dive into the week's top market news. European stocks retreat as inflation concerns delay ECB easing. UK housing market shows signs of rebound. European equities pulled back from recent highs as unexpectedly strong Eurozone inflation figures for May fueled doubts about the extent of interest rate cuts by the European Central Bank, ECB, later this year. Major indices across the region were impacted, with France's CAC 40 index and Germany's DAX experiencing declines of 1.26% and 1.05%, respectively. Italy's FTSE MIB remained unchanged, while the UK's FTSE 100 index slid 0.51%. The Eurozone's annual inflation rate unexpectedly rose to 2.6% in May, exceeding consensus estimates and marking the first increase in 5 months. This uptick was driven by a faster rise in services inflation and a rise in core inflation, which excludes volatile items like energy and food. Meanwhile, the UK housing market showed some signs of recovery, with the nationwide Building Society's House Price Index reporting a 0.4% sequential rise in May, following 2 consecutive months of decline. This resulted in a 1.3% year-over-year increase. However, net mortgage approvals for house purchases slightly decreased in April, falling short of market expectations. In the face of these mixed signals, ECB chief economist Philip Lane indicated that a rate cut is likely at the June 6 meeting. But the extent of easing throughout the year remains uncertain and will depend on incoming economic data. Lane emphasized the need to maintain a restrictive stance throughout the year, while acknowledging the possibility of easing within that restrictive zone. Now, our insight into alternative markets. Private equity's appetite for the European aerospace and defense sector is soaring, fueled by a combination of industry trends and economic conditions. This strategic shift is creating a dynamic landscape of opportunities and challenges for both companies and investors. Consolidation and restructuring within the industry are driving significant interest from private equity firms, who see opportunities to acquire and revitalize struggling companies or to consolidate smaller players into more efficient entities. The rapid technological advancements in the sector, including areas like unmanned aerial vehicles, space exploration, cyber defense, and artificial intelligence, are also attracting investment from private equity firms seeking high growth potential. Moreover, the heightened geopolitical tensions and subsequent increases in defense spending by European governments are further fueling this interest, creating a favorable investment environment for the aerospace and defense sector. The current undervaluation of many A&D companies, a result of recent market fluctuations and pandemic-related challenges, also presents attractive acquisition opportunities for private equity firms. This surge in interest is evident in several key trends. Private equity firms are primarily targeting mid-market aerospace and defense companies with strong growth potential and niche expertise. There is a growing emphasis on investing in companies developing cutting-edge technologies that could disrupt the industry. Additionally, cross-border deals are becoming more common, allowing PE firms to expand their reach and create synergies between companies across different countries. However, this increased interest also comes with challenges. The heavily regulated aerospace and defense sector poses significant regulatory hurdles for PE firms, requiring them to navigate complex approval processes. Furthermore, the long development cycles of aerospace and defense projects demand a patient approach and long-term investment strategies. Lastly, PE firms must adhere to stringent security and export control regulations when investing in defense-related technologies. Despite these challenges, the outlook for private equity investment in the European aerospace and defense sector remains optimistic. The industry's growth potential, coupled with favorable market conditions and the need for innovation, are expected to continue attracting significant PE capital. The success of these investments will hinge on the ability of PE firms to overcome regulatory obstacles, manage long investment horizons, and adapt to the rapidly changing technological landscape. In conclusion, the increasing involvement of private equity in the European aerospace and defense sector is reshaping the industry, fostering consolidation, innovation, and growth. While challenges persist, this trend is set to continue, creating new opportunities for both investors and companies in this strategic sector.
Thank you for listening to this episode of Hub Capital, the Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about T-Hub Capital and our activities, visit our website, hubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the T-Hub Capital team.